China's Yuan stablecoin, just another tool of digital control. Commentary. China's push for a yuan-backed stablecoin is less about innovation or global finance and more about extending the Chinese Communist Party's digital surveillance and control, making it unlikely to displace the dollar or deliver true financial freedom. China is preparing to approve a major plan to boost global use of the yuan by allowing the creation of yuan-backed stablecoins, a reversal of its previous stance against digital assets. The State Council was expected to review the roadmap last month, which would set targets for international yuan usage, assign regulatory roles, and establish risk control measures. China views stablecoins as a tool for yuan internationalization, reducing dependence on the dollar and expanding cross-border trade payments. If approved, the plan would represent a dramatic policy shift. China banned crypto trading and mining in 2021, but it reflects Beijing's recognition that blockchain-based, fiat-backed tokens may be a means of internationalizing the yuan. A stablecoin is a type of cryptocurrency designed to maintain a consistent value, usually $1, by being backed by reserves of real assets. There are several types. Crypto-backed stablecoins, which use other cryptocurrencies as collateral. Algorithmic stablecoins, which rely on code or algorithms to maintain stability. And fiat-backed stablecoins, which are backed by fiat currency held in bank accounts. A proposed yuan stablecoin would fall into this last category. The idea behind a yuan-backed stablecoin is that having a fiat currency as collateral would stabilize its value. But fiat currencies themselves are not truly stable. They fluctuate minute by minute. If the US dollar rises or falls, a dollar-backed stablecoin moves with it. The same would be true for a yuan-backed stablecoin. In this sense, the term stable is misleading. Fiat-backed stablecoins are still tied to the volatility of fiat currencies and therefore do not represent a genuine departure from the traditional fiat system. China's central bank is likely eyeing the stablecoin market with the goal of displacing the US dollar, which backs 98% of all fiat-denominated stablecoins by volume. The US government itself does not directly issue stablecoins, though recent legislation such as the Genius Act has created regulatory frameworks for them. In most countries, stablecoins are issued by private companies under government oversight. By contrast, China's proposed yuan-backed stablecoin would almost certainly be state-controlled rather than privately issued. Supporters of stablecoins point to several functions they can fulfill. For example, stablecoins can be programmed with smart contracts to enable automatic payments, lending, and other financial services. However, these functions are not unique. Similar capabilities already exist through PayPal, Wise, traditional bank accounts, brokerage platforms, and in China through Alipay or WeChat Pay. Another supposed advantage is borderless transfers. Stablecoins can move globally, 24/7, without relying on traditional banking infrastructure. Yet this, too, can be achieved through various apps and online banking systems. More importantly, in China, such features clash with state policy. The CCP maintains strict capital controls to limit money flowing out of the country. Allowing citizens or non-citizens to seamlessly move money abroad via a yuan-backed stablecoin would undermine those controls and potentially weaken the CCP's ability to manipulate the value of the yuan. Crypto enthusiasts often cite the alleged anonymity of blockchain as an advantage, though a more accurate description is that transactions are merely pseudonymous. Unlike bank transfers, users don't need to reveal their identity for each transaction. In reality, however, blockchain transactions are more traceable than physical cash, leaving permanent public records that can be tracked and analyzed indefinitely. Every transfer can be tracked end-to-end, with the exact units in a wallet traceable to every previous holder. Most cryptocurrencies are pseudonymous rather than truly anonymous. They provide digital nicknames, not genuine anonymity. A 2024 study found that 60% of Bitcoin transactions can be traced back to individuals. Government agencies such as the IRS now use blockchain analysis companies to link cryptocurrency addresses to real-world identities through exchange data and know your customer procedures. Unlike physical cash, which leaves no permanent ledger, cryptocurrencies create an immutable public database of every transaction that anyone can analyze. No sovereign government will ever allow truly anonymous transactions, whether for reasons of taxation, sanctions enforcement, or preventing terrorism and criminal activity. Starting in 2026, All U.S. crypto exchanges, excluding decentralized ones, will be required to report transaction data to the IRS, demonstrating the inevitable expansion of government oversight. This is especially true in China. The last thing the CCP wants is pseudonymous transactions. Beijing exerts control over every aspect of the economy and civil society through the most sophisticated digital surveillance system ever developed, including more than 200 million CCTV cameras in the Skynet system with facial recognition technology. In July, China launched a unified digital ID system that centralizes citizens' digital footprints and integrates with the social credit system for real-time monitoring. The digital yuan is designed to give the CCP unparalleled insight into personal finances and powerful levers for punitive action. Allowing anonymous financial activity would undermine that control, which is why Beijing will never permit it. The Chinese regime is pursuing yuan-backed stablecoins not in spite of surveillance concerns, but because they can be engineered to enhance surveillance while advancing geopolitical aims. The strategy is to combine blockchain efficiency and cross-border payment capabilities with total state control, creating what experts call a geopolitical weapon rather than a tool for financial freedom. By offering an alternative ecosystem that bypasses traditional gatekeepers, the CCP seeks to erode US dollar dominance in trade and payments. Even capturing a fraction of the global stablecoin market would allow Beijing to expand yuan usage internationally while keeping strict political control.